And in my opinion, gold will head to $4,000 to $5,000 an ounce in the next 4 to 5 years. And if we look at inflation, which is killing the US dollar right now, gold is a great hedge against inflation.
This podcast is brought to you by safeasgold.com. Call now for your free gold kit at 1-800-510-9594. An $80 value, this kit and DVD will show you everything you need to know about gold and how to use gold in your investment portfolio. Call 1-800-510-9594.
It's time for the Gold Show. Jonathan Rose, CEO, President of the Capital Gold Group, and Precious Metals Investment Strategist is with us today. Jonathan, as always, good to talk with you.
And it's always a pleasure to be here. In fact, gold has risen to a 7-week high since the beginning of August to over $960 an ounce, just like I was predicting on the last week's show. And this is because the dollar has been falling. An update from the FDIC, who insures our banks, they've announced that 5 more banks were closed as of July 31st, 2009, bringing the year's total to 69 bank failures. And as the world unravels, people are beginning to realize the advantages and benefits of owning gold as a part of a balanced portfolio.
Jonathan, so much to talk about today. You began with some numbers here. 5 banks have closed. It's kind of interesting because we're hearing these politicians talk about the recovery is just about here, things are looking great, but it may not be so. Explain what's really going on.
Well, as of the end of June, regulators have seized the most U.S. banks this year since 1993. And in fact, the U.S. economy has shed about 6 million jobs since the recession began in December of 2007. And according to Reality Track, foreclosure filings surpassed 300,000 for the 3rd straight month in May. So when reports are coming out saying that there's recovery in sight, things are slowing down, I actually disagree. And in fact, one of my friends who's a trader for Citigroup over in London, well, they're announcing over there that the recovery, they don't expect things to actually get better until 2013, which I think is a much realistic figure. And in fact, we have a Nobel Prize winning economist by the name of Paul Grumman, and he said that the world's economy is showing not a hint of a V-shaped recovery marked by a swift decline and revival. In fact, the economy is stabilizing, not recovering. And I think that's a more of a realistic approach to say that the recession is ending. No, I don't believe the recession is ending. I believe in the next few years it's stabilizing, but it's definitely not recovering. And as we have noticed these worldwide troubles that have trickled down from, the collapse of all the credit crunch that happened over here, people have to realize that the dollars where they've been making money over the past few years necessarily won't give them the same type of returns, forward moving. And this is very apparent, especially with people's IRAs that are down 40 to 60% over the last couple of years. People have seen a lot of volatility in the stock market, and people who are looking for quick gains right now, my opinion is you're not going to see them. And in fact, if you listen to Warren Buffett too, who's clearly stated that the days of double-digit returns are over, they're not going to be happening again anytime soon. And in fact, that's one of the reasons why Mr. Buffett recently purchased 2 of the largest gold manufacturing companies in America today, because he is also diversifying his billions of dollars by holding gold. Now, you don't have to be a billionaire to diversify your holdings in gold. Anybody and everybody should be owning gold, whether you have stocks, CDs, or you don't have an investment portfolio at all, and you're just sitting in paper dollars. Well, now is the time to be proactive, take a portion of those dollars which are shrinking right now, move them sideways into precious metals, particularly gold and other assets like silver, that you get to hold on to, because that's where the security is right now, holding on to tangible wealth. And again, that's why I always refer to gold as portfolio insurance that everybody should be owning right now.
Jonathan, you speak of gold with a sense of urgency, and I know you want to share the phone number, but why an urgency right now?
Well, I think, you've got to look at what a lot of these hedge fund managers are doing. For the first time in history, they are also purchasing gold. So a good example of this is a company called Northwestern Mutual Life Insurance Company. People may be familiar with them. In fact, they're the third largest insurance company in America. And for the first time in the company's 152-year history, they hedged themselves from their declining assets by purchasing gold. And when you look at unemployment on the rise, when you look at these bank failures that are happening, which to me is very frightening, large companies going under, you have to realize that there's a flight to safety and security. And when markets unravel, people flock towards gold for safety and security. Main reason being it's independent of all market cycles, and really gold is the only asset that's independent of everything that's going wrong out there. So if you're like me and think that things are actually going to get a little worse before they get better, then you should actually, get an education, start looking at gold, because this isn't something that's just appeared overnight. Gold has been around for centuries. We've just been trained by our brokers to buy stock, buy more paper, and when we lose that money, take it on the chin like everybody else, and it does not have to be that way. And in fact, there's reasons why members of the royal families, heads of states, they've been using gold to protect their wealth for centuries. And if you haven't done so already, now's the time to protect your wealth with solid gold that you hold on to.
And one way to get started is to get the Gold Guide, freshly updated for 2009. It has a DVD that explains the history of gold, really gives you a good solid background on this history that goes way back. Kings and pharaohs traded with gold. In fact, you've told me that gold is so liquid that if you have it, it's easier to transfer in some other country than our dollar is, right?
Absolutely. If you travel around the globe and maybe you have dollars in your pocket and maybe in the other pocket you had gold coins, well, what do you think they'd rather take if you needed to barter or use a monetary exchange? If they know the gold is a real gold coin and it's an international asset, people would much rather have the gold. In fact, the gold is worth more than the dollars in your pocket, which is very volatile and continues to shrink day after day. And one of the reasons why gold has been on an upsurge lately, besides all these economic factors, is that the world's supply of gold is dwindling down and the cost to actually manufacture the gold out of the ground is rising. So there's also a supply and demand issue coupled with world economic events that's going to make gold surpass the $1,000 ounce, $1,200 ounce, and in my opinion, gold will head to $4,000 to $5,000 an ounce.
We're talking with Jonathan Rose from the Capital Gold Group. We've talked about how large companies are hedging against the dollar here by buying gold. We've talked about bank failures, job losses, and the flight to safety. Now let's get into some of the headlines this week. Jonathan, talk about gold goes to a 7-week high. Explain what's happened there.
Well, as gold continues to go to a high, if we look against the US dollar, the dollar has been shrinking. And I know I always seem to talk about a common theme with the dollar that's shrinking, but the dollar is evaporating before our eyes. And I always tell a story about if we went back to the year 1920 and we took a $20 bill and a $20 gold coin, because they were both worth the same back then. A 1 ounce gold coin and a $20 bill in the year 1920 would both buy a man a brand new suit. Now today, 2009, that same 1 ounce gold coin is worth roughly over $1,000, and it would still buy a man a brand new suit today, just like it did in the 1920s. But the $20 bill, it wouldn't even buy you a tie for your suit, let alone lunch for you and a colleague. So, you don't see it. It's very insidious, but the dollar is evaporating. It shrinks a lot every day. When people say, wow, the dollar went up today, you shouldn't be looking at what the dollar's doing today. What you want to do is you want to look at the history of the dollar. So if you go back 5 years, 10 years, 20 years, you will see a steady decline in the purchasing power of the dollar.